Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski.
The US dollar extended its rally yesterday after the latest inflation data shocked the market. US producer prices jumped 1.4% in April on a monthly basis, nearly triple the 0.5% forecast and the biggest monthly increase since March 2022. On the yearly basis, PPI climbed to 6%, making the highest reading since December 2022. That fueled fresh dollar demand and kept pressure on the euro. Today, the only notable release on the calendar is Spain's CPI report, but it's unlikely to change the broader bearish sentiment around the euro. If the data comes in weak, EURUSD will likely stay under pressure. In that scenario, the key support to watch is 1.1701, which is held up well yesterday. A false breakout there would provide a decent long entry setup, targeting a recovery towards 1728. A breakout above that level, followed by a successful retest, would confirm bullish momentum and open the door for a stronger push towards 1753. The final upside target stands at 1786. Where profit taking is likely to kick in. If EURUSD moves lower and buyers fail to show up around 1701, bearish pressure on the euro will intensify, potentially dragging the pair down toward the next key support level at 1.1678. Only a false breakout there would justify fresh long positions. Otherwise, aggressive rebound buys can be considered from 1657, targeting a 30-35 pip intraday correction. Sellers stepped in aggressively once again, riding the wave of rising US inflation and keeping pressure firmly on the euro. If EURUSD attempts a modest rebound in the first half of the day, resistance at 1728 will likely become the key battleground. Only a false breakout there would offer a solid short setup, targeting a move back towards support at 1.1701. A clean break and consolidation below that level, followed by a retest from underneath, would confirm stronger bearish control and likely trigger another wave of the euro selling, opening the path toward 1.1678. A test of that level would reinforce the newly formed bearish trend. The final downside target sits at 1.1657, where profit taken on short positions is likely. On the other hand, if EURUSD pushes higher and bears fail to defend 1728, where the moving averages currently favor the sellers, the euro could regain bullish momentum. In that case, it's better to postpone shorts until the stronger resistance at 1753. I'll be looking to sell there only after a failed breakout attempt. As for aggressively fade trades, short positions on a direct rebound from 1786 remain in play, targeting a 30-35 pip intraday pullback.
And now it's time for GBPUSD. Let's discuss it with Paulo Greco.
The average volatility of the GBPUSD currency pair over the last 5 trading days is 91 pips, which is considered as moderate. On Thursday, May 14, we expect the pair to trade within the range defined by 1.3428, 1.3610. The upper channel of the linear regression has turned upward, indicating a recovery of the upward trend. The CCI technical indicator has not generated signals recently. The GBPUSD currency pair continues its recovery after 2 months of the geopolitical uncertainty. Donald Trump's policies will continue to exert pressure on the US economy, so we do not expect the US currency to grow in 2026. Therefore, long positions with a target of 1.3916 and above remain relevant. When the price is above the moving average line, it's a sign line on a graphic. If the price is below the moving average line, short positions can be considered with targets at 34.89 and 34.28 based on purely technical grounds. In recent weeks, the British currency has recovered, while the geopolitical factor has lost its influence on the market.
That's all for today. See you online soon.